Hi, this is Kirk Lynch again, and we wanted to continue our discussion about a new classified balance sheet, how our balance sheet's getting more complex. And so this video is going to focus on how we take a, an adjusted trial balance and turn it into a classified balance sheet. We've seen this slide in past videos where we have the basic format of our classified balance sheet. We have our assets here on the left. We have it broken down into categories of current assets, which include things like cash, accounts receivable, prepaid insurance, and supplies. We're going to want that total current assets. Then our next category was the new one we discussed that depreciation brought about, which is property, plant, and equipment, where we have things like land and buildings, the accumulated depreciation account that goes along with our building, equipment, and the accumulated depreciation account that goes along with our equipment. And then we get to our total property, plant, and equipment, and eventually our total assets. On the right side over here, we have our liabilities, which also got broken down into additional categories. Current liabilities, things that are due within 1 year, like accounts payable, unearned revenue, salaries and wages payable. Again, we'll want to total our current liabilities. And then we move into things that are due more than a year from now, liabilities like notes payable and mortgages payable. We'll want to then total long-term liabilities. We'll eventually get to total liabilities. Then our owner's equity section of our balance sheet really doesn't change. It's just the owner's capital account as we've had in the past. And then our total liabilities and total owner's equity will be matched up against our total assets to make sure that our balance sheet balances. So here we have a chart of accounts for a company, and we can see that our chart of accounts is also broken down into our different categories. The balance sheet accounts are the ones here on the left-hand side of this chart of accounts, our assets, liabilities, and down to our owner's capital. These accounts on the right-hand side would be associated with an income statement, and we'll talk about in a different video how to take those accounts and build a multi-step income statement from those accounts. So here we have a typical, I've demonstrated here in our chart of accounts how the balance sheet side is broken down into the way it should appear on our classified balance sheet. We've got our current assets and our property, plant, and equipment. We've got our liabilities accounts broken down between our current liabilities and long-term liabilities, and then as we said, we have our owner's capital account. Here is an adjusted trial balance. So when we're going through the accounting process, we've gone through steps 1, 2, and 3, which are to journalize transactions. Step 2, post them. Step 3, do an unadjusted trial balance. Then we've been through the adjusting process, which includes the discussion that we've had in this chapter already about which accounts get adjusted, including the depreciation adjustment we have for our property, plant, and equipment assets. And we've come to this point, this step in the accounting cycle where we now have an adjusted trial balance. An adjusted trial balance has all of the information we need, all of the account balances that we need in order to create our financial statements. Now, we're skipping over doing an income statement and a statement of owner's equity, which should be the first 2 financial statements that are done because our discussion revolves around a classified balance sheet. So we're going to be taking this information here, cash, accounts receivable, prepaid insurance, etc., down through all of our assets and liabilities and creating a classified balance sheet. The only account that's not accurate on this page is the Bill Jones capital account. The capital account will be updated to include net income and the withdrawals, and our statement of owner's equity will reflect that with a new ending capital number, and we're going to use that ending capital number when we build our balance sheet, but we will not demonstrate how to get to that point in this video. That will be another video. So if we look at our balance sheet, this is a completed classified balance sheet using the information we just saw on the previous page. And what I'm going to do in future slides here is we're going to go step by step and determine how we put this information together, where it came from, what these totals mean, what these columns represent, and all that. So let's start with that process. How are we going to build a classified balance sheet? So we're going to start with our asset side of our classified balance sheet. As all financial statements, we require a heading, and you'll recall that the heading on our balance sheet is the company name, the fact that it's a balance sheet, and the date of this particular balance sheet, which is a day and time, not for a period of time. The income statement and the statement of owner's equity are reflected for a period of time, like the year ended or the month ended. In this case, a balance sheet just represents how are we on December 31st in this particular year. So if we looked at our chart of accounts, we're going to start with our assets, and we're going to, the accounts are going to get listed in our balance sheet just like they are in the chart of accounts. We're going to have our current assets, and they will be in this order: cash, accounts receivable, prepaid insurance, office supplies, store supplies, merchandise inventory, and then our property, plant, and equipment. We've got these three capital assets: land, office equipment, and store equipment. And we also have the accumulated depreciation accounts that go along with our office equipment and our store equipment. So when we look at our our adjusted trial balance, we have those accounts highlighted here, and we have the ending balances of those accounts shown here as well. So we're just going to transfer that information into our balance sheet. And here's how it happened. Here's our current assets. They get listed here. These amounts are the same ones that came from our adjusted trial balance. Now, as in all financial statements, these columns do not represent debits and credits, okay? The right-hand columns represent totals. The center column in this case are the actual account balances. And the left-hand columns we're going to talk about down here under property, plant, and equipment is how we're going to calculate our book value of those particular assets that are depreciable. So we start here with the top half, our current assets. The actual account balances get listed in the middle column. This total current assets is just adding these numbers in the center column together and then posting that total out here in the right-hand column. Moving on to the property, plant, and equipment, you'll notice that we have numbers in the center column and numbers in the far left-hand column. So let's start with the center column. This represents book value of the asset. Now, as we discussed in the past, land does not depreciate, so the land total cost goes in the center column. Office equipment gets depreciated. So in the left-hand column, this office equipment is the cost of that office equipment from the original value, and that asset shows up on our chart of account, or on our adjusted trial balance as $95,000. The accumulated depreciation of the office equipment account has a total value of $22,000. And as we discussed on an earlier video, the cost minus the accumulated depreciation, so $95,000 minus $22,000, gives us a book value for the office equipment of $73,000. And that book value gets recorded in the center column on the same row as the accumulated depreciation of the office equipment. We repeat that equipment, or that process rather, for store equipment. Here was our original cost of the store equipment, $117,000. Our depreciation account shows a balance of $27,000, and therefore 117 minus 27 leaves us a book value for our store equipment of $90,000, and that goes again in the center column. We move on to the next step. So we're going to take those values from our middle column, the $100,000 for land, the book value of our office equipment, and the book value of our store equipment, and add those three numbers together, and that gives us our total property, plant, and equipment, in this case $263,000. Again, it goes in the right-hand column as a total. And then as we move to the final step on the asset side of our balance sheet, we take our total current assets and our total property, plant, and equipment, add them together, and that gives us our total assets of $286,500, and that's the process we use to build the asset side of our balance sheet. Now we move over to the liabilities and owner's equity side of the balance sheet. And so from our chart of accounts, this is going to involve our current liabilities, and these three accounts will be showing up in our balance sheet under the title of current liabilities. And in this particular business, we only have one long-term liability, a note payable, and that'll show up in our balance sheet under long-term liabilities. Here in our adjusted trial balance, we've highlighted those liability accounts and the amounts, the balances of those accounts. Notice that those balances are all credit balances because they're liabilities, and they should be. And so now let's move on to building the liability side of the balance sheet. So here we can see, here's our three current liabilities. Here there are two columns to deal with in numbers. The left-hand column are the actual account numbers, and in the right-hand column we have our totals. So here are our three current liabilities and their account balances. When we add these three numbers together, we get our total current liabilities of $21,000. Then we move on to the long-term liabilities. We only have one, notes payable. If we had more than one long-term liability, they would all be listed here, and their account balances would be in the left-hand column, and the total would move for long-term liabilities gets listed in the right-hand column. In our case, since we only have one long-term liability, it's the same as it was for the individual account amount of $50,000. And when we take our total current liabilities and we add it to our total long-term liabilities, we get a total liabilities of $71,000. When we move on to the owner's equity section of the balance sheet, you'll notice that our owner's capital amount is not the same amount we had on our adjusted trial balance. It's $215,500, which reflects the ending capital balance from our statement of owner's equity, not the adjusted trial balance owner's capital number. But when we get to this side of the balance sheet, we take our total liabilities, we add it to our ending owner's capital number, again from the statement of owner's equity. These two together add up to $286,500. And then when we compare our asset total to our total liabilities and owner's equity, we see that they are the same number, and our balance sheet is indeed balanced. So I hope that helps you in the process of building a classified balance sheet and understanding where the numbers come from, where the numbers are to be recorded, and particularly how this book value process works in the property, plant, and equipment side on the assets side of the balance sheet. If you have any questions, as always, you know where to find me, and feel free to give me a call.